Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, June 6, 2018. This video will be a follow-up to the video I did about a week or so. Actually, let's see when that was. Okay, I had to stop the video to check that. That was May 24th. So on May 24th, I posted a video, Gold and Silver Miners Top Trade Ideas, so about 2 weeks ago. And I just wanted to do a follow-up to that because, I'm pressing this trade. By pressing it, I don't mean I'm, not getting any more aggressive, but I'm holding on to the positions I had. I had mentioned, we have GDX as an active trade on the site, and GDX is all encompassing. The gold stocks tend to move in relative synchronicity, so I'm leaving that one on. And again, I do this video because I'd like to personally, take some of my favorite setups in the sector, gold and silver mining stocks, and I know some of you guys like to do that as well, trade individual stocks, build your own little basket, if you will. So I'll go over a quick update on gold, silver, the US dollar, and then just I'll fly through those charts. Since I already did that video pretty extensively, I'll just be a little quicker this time. I'll cover the same stocks that I highlighted in that video, and I'm liking what I see. That's why I'm doing the video. Here's a euro US dollar. Again, this is one of my proxies for watching the dollar index because the euro is by far the top component. You can see this downtrend line. I mean, bigger picture, we had this wedge or this primary uptrend line broke down, sharp sell off, hit support, and you can see right here, this is probably the most important recent development here. You have this downtrend line. I'm not crazy about the downtrend line. There's not a lot of reactions. However, you can see we had that big green bullish candle right there and more upside. We had a divergent low, everything else I like to see. So again, the case has been made, and then particularly on this weekly chart, this is a 10-year weekly chart, the euro US dollar pair, and what stands out to me, again, if you're new to the site, that's why I'm doing, I tend to cover a lot of things I've covered recently because there's always new people coming in. This back at this point in time was a very large basing pattern in the euro US dollar. Broke out. That's very bullish. Came and back tested it once, and we back tested that level again. So far, you can see we've hammered off that level or reversed pretty sharply. So this is significant support, and as long as that support holds, this is to me bullish. Multi-year basing pattern, a breakout, two successful back tests. So that's that. And where I'm going with this, if you're new to the site again, gold has, if you look at any long-term chart, a very, very strong inverse correlation to the US dollar, meaning when the US dollar goes down, gold goes up and vice versa. And as I always say, because I get this a lot, there are temporary disconnects in any relationship between two asset classes. Temporary disconnects where you can sometimes see the dollar falling and gold falling as well. But again, I've overlaid charts in the past many times that show an unmistakable inverse relationship between the two. So I'm not going to do that in this video. Let's just jump into the charts of gold and silver, and then we'll look at the miners and we'll wrap this up. Here's gold again. Sloppy. It's been in a trading range all year. This purple box here shows you the trading range that we've been in, a sideways range throughout 2018, and we had a breakdown recently. I maintain that this is most likely going to prove to be what we call a bear trap or a false breakdown. So far, in a way, it has been. Because you can see we gapped down below that range impulsively, and there was really no follow-through selling to that. So what you'd normally see, if this, a lot of times when you see these trading ranges, the next direction, the next trend, whether it's bullish on the upside or bearish, is determined by which way these trading ranges break. So one would think logically, and if this, the bearish case, and it may pan out to be the bearish case, and I'm wrong, but if so, you would have expected more downside, more impulsive selling following that. Instead of that, what happened was we've traded sideways to a little bit upwards. And again, you can see here there's a trend line I have off the lows here in late 2016, and more importantly, and this is what I've maintained for a while here, is this here's that level. You can see it very clear on this weekly chart. So we're at trendline support. We have this potential triangle, large triangle pattern here. We have resistance at 130.05, and that's it. So gold's holding support. And as I'm watching, the stock market's taking a nice little leg down today too. So that might give some headwinds to tailwinds, I should say, to a gold trade. All right, let's look at silver real quick. Silver, the story is this, also in a large trading range throughout most of 2018. You can see this is the ETF SLV, large trading range, very well defined. I mean, a lot of activity in this range. And we had this one little brief pop above that failed. So, you could say that was a bull trap or a fake false breakout. However, what you didn't see, usually when you have a bull trap or a false breakout, you see very impulsive selling back down into the pattern and then below. And we didn't see that. We did fall back into the range, and that's it. Let's not try to squeeze blood from a stone here and make too much of this. Let's just watch and see if we get an upside break, which would be bullish, or a downside break. Sometimes you get these little whipsaw signals, and you want to see a solid and impulsive breakdown and or daily close. Don't look at these little brief breakdowns that close right back on the range like that. You'll know it when you see it. And again, so that's what we're looking at on silver. I could probably add a downtrend line here too as well. I'm looking at this chart. Yeah, let's do that now. I think that's it's worthwhile adding this downtrend line. You can see it comes in and captures a lot of reaction. So these are the salient levels to me right now that I'm watching. This downtrend line here, of course, this trading range, probably put a little higher weighting on the downtrend line. Then you can see that 1637-ish level as well. PPLT. Platinum, I still like platinum a lot. Mentioned that in some of the recent videos and static posts. Look at this support level going back for years. 2016, late 2016 lows. One, two, three more, two more reactions there, three total. We had this little false breakdown, bear trap below support, put in a divergent low, and then a sharp rally. And this is what usually happens after these false breakdowns. So again, what we're seeing is this level is holding so far. Now, so I always say support is support until and unless broken. So if it breaks support, we go down much more below that, much more below these recent lows. That's obviously bearish, but you can see we have bullish divergences building, and this is what tilts me to the bullish side. I'm sorry. As a fact, we have this divergent low at support. We have a well-defined trend line. Look at all the reactions here on this trend line too. To me, platinum looks ready to pop. If it gets above there, you're likely to see a pretty strong rally, and I don't see this thing even slowing down. These are all levels, each of these lines, but my minimum swing target would be up here, and that's about the 91. Here, I'll give you that number. 91.43-ish level. But I do think, if the bullish scenario plays out, the bearish scenario in the dollar, if there's more downside to come, this would be an ideal swing target. That's up around 97, 98, somewhere around there, a little bit above 97. Pretty decent move in platinum. And again, that's just the raw metal. If you want more bang for your buck, you trade the miners. And let's roll into that now so we can wrap this video up. There's GDX. Again, same story I've covered for a while here. We've been mostly sideways on this trade, slightly positive, slightly negative since we entered. I don't even remember now where we've entered. This one's been on for a while. It's rare to see a lot of the swing trades on the site trade in such a sideways trading range. But remember this. I pointed this out today in the trading room to somebody. The S&P 500. I know I'm getting off topic here, but the S&P 500 year to date. If we go back here, this is January 29th, December 29th, the last trading day of the year. The S&P 500 is only up 2.8% year to date. So we've gone nowhere. We've been in a large trading range, and this is the nature of the market right now. We've had opportunities certainly on the long and short side to swing trade this market with these micro rips and dips. But remember, the bigger picture is so far year to date the stock market's gone virtually nowhere. This is a stock market. The Nasdaq 100 is not the stock market. It is a tech fund with an Amazon kicker is what I call it because it's so heavy. Well over half the stocks are technology stocks, and even then, most of the returns on the Nasdaq 100 come from just the top 10 holdings, which are mostly your big tech companies. Okay, so back on point here. Let's get back to GDX again. That's the story, and you look at this chart and you say, wow, well, GDX was not just 1 year; it's been for 2 years since 2017. It's trading a big sideways trading range. Yes, but remember these are big rips. So I'm going to just measure out here. I'm going to grab the bottom of that range to the top of that range for the last 2 years. or year and a half, that's about a 21, 22% range from top to bottom or bottom to top there. So these are certainly swing tradable rallies. Even if you get half of that, in a few weeks you get a 10% gain in GDX, you're doing well. And I know a lot of you guys on the site like to trade Nugget and Dust, those 3-time leveraged ETFs. Or now we'll roll into the my watch list of the stocks that I'd highlighted. These aren't in any particular order. They're just the ones I had flagged. I believe all the same ones from that other video. So let's take a look. Again, not in any particular order. APX looks ready to pop if it can take out this downtrend line. You can see the downtrend line that comes off that was September, early September 2017 highs. There's a downtrend line there. There was an uptrend line here that broke, but again, this is what's keeping me bullish on the miners for now. They've been extremely resilient despite the weakness in gold. We had a breakdown here, but you can see since that breakdown, yes, we moved lower, but not very much. That's not very impulsive. A lot of times you break a trend line, like here's a downtrend line, you back test it, and then boom, sharp rally. Same thing in reverse. If I were to put a trend line here, I'll do that for you right here. I want to just illustrate an example. There it is. Here's a trend line right there in Barrick. You broke down, boom, very impulsive selling. You could probably find some other downtrend lines or uptrend lines along the way. Right there was one, boom, impulsive selling. Here was a trend line, boom, impulsive selling. Not the case here. So what I'm looking at is the character of these stocks, since this breakdown. So I do have to recognize this because it was a well-defined trend line. But again, so far we're down. And again, no buy signal yet on Barrick. I just want to make that clear until this level is taken out with conviction. But that's the way I'm leaning, and I'm eyeballing this 1546 level right now as a swing target for Barrick. All right, let's move on. Be a little quicker on the next ones here. FNV, Franco Nevada Corp. Bullish falling wedge, very clean. I like this. These are my favorite patterns. I love bearish rising wedges, as you guys know. Here's one nice, well-defined uptrend line, divergent high, negative divergence. Boom, nice correction off that high. That was a drop of over 22%. That ended with a bullish falling wedge, very well-defined downtrend line, breakout, impulsive price action, everything you like to see. Correction, next thrust up, another correction, and we're holding support. You can see these lines here. This is support right here against these lows. So I like this one. The indicator is bullish. This PPO signal line, the 9 EMA, is above zero, turning back up. Everything I like to see. So my expectation, obviously you want to see this one hold support there around $70. That's also an objective area to add to it or on a pullback, or place your stop not too far below that 70 level. But if we hold support here, I think we'll go and challenge and probably take out this previous reaction high. So you're looking at, pretty decent upside if it gets up there, 5-6%, and of course, over time a lot more if we can really get some traction going in the miners. All right, continuing on, WPM. This is Wheaton Precious Metals Corp, silver miner, and the story on this one, you can see these lines. There's just a big sideways trading range. Really have two lines. I can box it in here. This is the range I'm looking at. We had one little period where it was above that trading range there. A couple times I tried to poke its head out here, couldn't do it. So basically, this is a lot of energy building here. This is like a coiled spring, the sideways trading range. So what you want to do is look for an impulsive break above and close above that 2213 level. Yeah, round it up a little bit because we've had a few breaks there, and certainly if we get above 2310, we'll have taken out that failed breakout there, or at least the end of that rally, I should say, those reaction highs. And then I don't see anything even remotely close to resistance on this stock until 25. And again, there's longer term potential when you really step out and look at these, the charts. There's more potential there. But right now, that's all I can see in the charts is, these moves I'm talking about, these swing targets that I'm mentioning here. GOLD, Randgold Resources, nice downtrend line. This price channel, there's a descending price channel. There's your buy signal. We need to pop above that downtrend line. There's some minor resistance there, but I think this one's good all the way up here without even a hiccup. Hardly a hiccup if it does break out to about 89 and change there. RGLD, another one you can see a common theme here. A lot of these stocks are in these sideways trading consolidation periods, these trading ranges, and this one's starting to pop above it. There you go. You can see 90, roughly 90.50 is the top of that range. Very well defined. A lot of reactions going back for the last year or so there. And again, here's another one that broke below trend, but that never panned out. So those that shorted the miners and got bearish on a lot of these breakdowns are now underwater, and these shorts are starting to be squeezed out. And that can build some momentum once they really see this stock break above 90.50 or so. I wouldn't want to be short this one. I would certainly cover if I had shorted that breakdown, especially if it gets back above, any higher than this. That stock's going to run. It could break out to multi-year highs. It just has a little bit of resistance here, that previous reaction high, and then it could really go. KGC, Kinross Gold. Nice little, we have divergent low right here. See the positive divergence. That PPO starting to curl up. The momentum indicator confirming the bullish divergence. $4, there's a target there. Not one of my favorites, but I like it. BVN, normally I might get real bearish looking at this wedge type pattern. You have a well-defined uptrend line here, negative divergence to the high. Now that divergence did play out, by the way. It certainly played out for a correction, but this one continues to find support on this trend line and looks pretty strong. A lot of buyers stepping in every time the stock comes back to that trend line. I think I mentioned it here a couple weeks ago. So, it's already rallied from there, 5-6%, if that's where it was 2 weeks ago on that trend line. I can't recall exactly where it was at the time. Next one up is AU. Anglo Gold. That one has a nice well-defined downtrend line as well as this 893 level. I color coded that yellow because that's a very significant level. Look at all the reactions that we've had back here in the past. That level acted as support. Support once broken then becomes resistance. So now technically that 893 is resistance. And again, like a lot of things I'm seeing here is a potential bear trap because we broke that support, which was, multi-months, almost a year-long trading there. That stock finding support finally broke below it, but now we're testing it again. So if we regain that level, you are likely to see the shorts start to get squeezed out. All the shorts that piled in on that breakdown, and as well, you'll see some natural buyers, some longs step in here because you have a downtrend line as well. So I love to see a stock where you have intersecting resistance levels, not just one, but two. In this case, you have a downtrend line as well as a very significant horizontal price support level or resistance level there. So I have a little note here, see weekly. Let's see what I noted there. Oh yeah, nice, strong. See, this paints the longer term picture too. These you have a potential bullish divergence here, positive divergence building since early 2017 or late 2016 on this one. There's that $88 support level. You can see way back in 2014 it was support there. Again, so it's when I'm painting a longer term picture that, if this stock is in a new bull market, and maybe it bottomed back here in 2015. So far, that is certainly the lows. But we'll see. Again, I don't want to spend too much time on this one. Let's just see what happens. There's still some work to be done to firm up the bullish case on gold and the miners, but that's what I'm doing here, and we're not far from that. If we start to get some upside momentum in these, you'll see one after another breaking out. GFI, there it is, another again key level 368. You can see all the reactions back here, even going back to 2017 reactions from below. So 368, 370, call it some important level, and then you have a downtrend line as well. So there's another one with intersecting resistance levels that could trigger a nice run up to, I'd say, at least that 429 level. Each of these are resistance levels here, by the way. You can pick your own target. Like I say, the markets are dynamic, and so is my analysis. So, we'll see. If this one does pop and it gets to the $4 level, that's from where we're at today. If I can grab it and measure it, that alone is about 11, almost 12% run. Up to 429 would be about 18.5%. Certainly some more potential beyond that, but let's just see what happens. IAG, IM Gold, if I pronounce that right. This one broke out recently. You had a downtrend line right here. You had a bullish divergence right here, the divergent low. We broke out, back tested, and we're above where we back tested so far. So, it looks pretty good. There's some reactions. We have to take out these previous reaction highs. Again, this one's not one of my favorites, but I think it's worth mentioning. AUY, I had this one flagged. I guess, well, we can see this trend indicators above there. Again, not one of my favorites, but I can see some pretty significant resistance here from about 308 to 318. So if it can pop above that level, I see a lot of reactions where it was capped back here before. If it pops above that resistance zone, you can see all the reactions back here. I think it runs and it probably goes to challenge these previous reaction highs right here and here. And that would be a pretty decent move in AUY. All right, next up is, sorry about the pause, PAAS, Pan American Silver Corp. This one really nothing stood out on the charts. I've just traded this one in the past, and when silver starts to move, this one's a rocket. You can have quick gains in short order. Here's a rally back here, 51%. There was even a bigger rally before that. Again, this one just tends to move when we get a trend in silver. We don't have that yet, but if you're just wondering, hard to really pick a very objective entry level. But I can tell you if silver starts to run like I think it might, you're looking at another 9% upside at least till this one has any resistance. BTG, B2 Gold Corp, there's a downtrend line to watch. There's support here at 264. So on this one, this is a simple case of, buy pullbacks to support. I may have mentioned that in the last video. 264 is a good support level. We've had several opportunities to buy the stock there. So you buy it at 264 with a stop somewhat below, and you let it run. That's it. Next one up would be AGI, Alamos Gold. I like what I'm seeing here. Here's a downtrend line. You can see the downtrend line that's been taken out. This one's continued to move up since then. And now we're at resistance. That line right there is at 579. So call it 580. So here's one that's already taken out a downtrend line. It's challenging resistance right now around 580, we'll call it. If it pops above there, we also have resistance here around 594, and that's probably a more significant level. I should probably color code that so it stands out a little bit. And why I did that is if you look to the left of the chart, you can see that level was very significant support going back for the last couple of years, all the way back into 2016 here. As I said, support is support, or resistance is resistance until unless broken, and then that's bullish. So that's what you want to see. This stock has some work to do here, but if it can get above, let's just call it the $6 level to be safe. We'll round up. I think this one has quite a bit of potential again, and we're going to need gold to cooperate as well, and the dollar and everything else that I mentioned before. It all goes together. Tahoe, Taho, Tahoe Resources, a nice, long, well-defined downtrend line breakout. Successful backtest. We backtested it for a couple months and have since been moving higher. 570 is now the magic number. We need to break 570. That's resistance. If we do, it's a very thin zone between 570 and 7012. By thin zone, you probably can't see it here. The volume at price histogram bars are very thin. That's because a thin zone is comparable to a gap. A gap is a thin zone in its purest form because there's no trades on a gap. Here we had just a little bit of trades. So really between here and this current resistance level, 570, that's the thin zone I'm talking about. And what happens is thin zones tend to get filled quickly because there's not a lot of resistance. So this one, if it can take out 570, you're looking at a move up to most likely to 712. That's a 24% return, and that's why I'm doing this video. A lot of upside in these individual names, where if you're trying to outperform GDX, I think you can do so by building a portfolio of the best looking individual gold stocks. OR, this one had a little false breakout here. There's a downtrend line. I left that downtrend line as is. We've been back testing, but I guess the levels to watch right here about $10, 10.07. That's support. You can see pretty well defined. It was resistance back here. It was support here. If this one can start to move back up, I think we'll challenge that previous reaction high at 1076. And these relatively low price stocks, that might not sound like much, but there's 7% right there. And if it moves up to that $11 target, there's about a 9.5% return. Makes it up to 12, you're talking about 19% or so. HL, Hecla Mining, there was a wedge right here, downtrend line, divergent low at this point here, bullish divergence in place, broke out, come back in a little bit. This is the key level to watch. I'll color code that line for you. This is the primary downtrend line. A lot of reactions off that 2016 high right there, and we need to take that out. If we do, first stop here is about the 460 level, and after that, this is about 560 right there, roughly. There's your target. Okay, a few more to go when we wrap it up. CDE, this is another gold, and so I believe a lot of these companies mine both gold and silver. There's the same story as a lot of these stocks. Here's 2018 sideways trading range. Not much else to say about it other than it did take out this downtrend line here. We're above that downtrend line, so that one plus for the check or one check mark for the bullish case. My minimum target here would be $10 if it takes out the top of that range, which is that is 875. Get a run up to $10. Next target after that would be 1220. This one can run. I've traded this one in the past too. When it wants to move, it can move. So that's another one to watch for there. You can take a pop over that level 875. Appropriate stops below, maybe get it if it rips and maybe comes in and back tests the top of that range after a breakout, that might offer another objective entry or add on something like this, a breakout back test and then a move up here. That's something along those lines is what I see this one doing. AG, First Majestic Silver Corp, uptrend line was broken, but this stock didn't even blink really. It's a little bit below that trend line right now, but 764. This is the level I'm watching here. So we need to see this one take out 764. Change that color back. And there's some targets up here. Again, not one of my favorites, but another one in the silver arena that can really move when silver is rallying. SBGL, Sibane Gold Limited. Divergent low. Here's the divergence down below, starting to reverse now, and I need to extend this downtrend line. That's what we need to take out. We take out this downtrend line that makes up a bullish falling wedge pattern. I see very little. I see a little minor resistance here. A couple reactions there around the 440-ish level, but this one first. My first preferred swing target would be this 440-ish level, and again, if the charts continue to firm up, this is a large pattern, and it could project a lot higher in the coming months here, maybe all the way up to that 737-ish area there. Three more to go. NGD, New Gold, bullish falling wedge. At the time of the last video, I put this line here saying this one had room to go down to continue to fall, and it still does, and keep these divergences intact. Now we have divergences at this point, so this could reverse at any time now. It doesn't have to go lower. I just wanted to mention that there's strong divergences, potential divergences in place, and you can even allow for a little more downside, but your buy signal is going to come either on some type of bullish candlestick reversal pattern or a break of this downtrend line there. And then first stop 264. It's at 223 right now. So again, that doesn't sound like a whole lot, but that's a 18-19% move just to that first target. And if it gets above there, that would be quite bullish because that's a pretty significant resistance zone. That was former support. You can see all these reactions here, and then the stock broke support, back tested from above, failed, back tested, failed. This is a very significant level. So that'd be my first target, but longer term traders, if that level goes, then that would be quite bullish in my opinion. Two more, EGO, Eldorado Gold Corp, excuse me, downtrend line, bullish falling wedge, or positive divergences at least here at the lows, and those divergences are playing out. We regained that $1 level. I mentioned that's very important back in the last video. When stocks fall below $1, if they trade too long, they face delisting, and so what happens is a lot of times insiders will come in to defend the stock and or the market, and the market likes it when it gets back above the dollar share price. I've seen this happen a lot, and so far so good. We're back above $1. That 104, we'll call it the $1 level, is support. And again, just from pure chart pattern, this one looks good all the way up here. If it gets from a dollar up to $1.46, that's almost a 40% plus gain right there if it gets there. We're at $1.16 now, and again, that's resistance. We might take that out, and then there's more upside in this one to come. You can see the stock has fallen. It's well off its highs. Go back for a couple of years. Just look at this one. This stock used to trade at 21, almost $22. All right, and one more to go. HMY Harmony. This is just a play at support. This is a stock that has fallen to a well-defined support level. You can see all these reactions along here. There was actually a trend line there. We broke that trend line. I guess that's where I covered it in the last video. I added this trend line, but now we're at the previous reaction lows, which are also a natural support level. So let's see if this one can hold here. And if so, that would be bullish. Otherwise, if it breaks that, it's going down. That'll be a multi-year low. You can see it right here like this. Um, so one to watch. Not one of my favorites because it's in a pretty precarious technical position. But if the miners rally, they'll most likely defend this support level, and this one could pop. And risk and reward go hand in hand. These lower price stocks have higher gain potential. This one's 21% if it hits that target right here of 192. But it cuts both ways as well. Just keep that in mind. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. As always, if you like the video, please give it a thumbs up on YouTube. Much appreciated.